Hello, traders. It is 8:07 a.m. Chicago time. I'm 7 minutes late today. Again, working from home. We have a nice flu going around, and so I'm having to work from home and help out. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. It is Wednesday, the 14th of November, 2018. This morning, reminder that crude oil inventories are pushed back. They're not coming out today because of the Monday holiday. The overall market sentiment is slightly risk on, nothing really huge. The Russell is the leader of the pack in the index world, up 50 basis points, followed by the DAX and the S&P, almost the same amount. The Nasdaq's up only 27.5 points. Crude oil is getting a small bounce. Crude oil is trading at 56.42 and up 75 cents. The laggard today is the U.S. bond, down 7 ticks. Gold is down $1.70. So it looks like it's just slightly risk on. We're trading in the S&P. We're trading inside of yesterday's range, and that's where we stand. Yesterday was, we'll go over the action yesterday in a minute. Overall, the calendar had CPI this morning in the U.S. Several figures from around the globe: Chinese industrial production, retail sales, German GDP, UK CPI, Eurozone GDP, Eurozone industrial production. And those are all behind us. We don't have anything ahead of us. We do have a Fed speaker, Quarles, I think that's how you pronounce it, in the House Financial Services panel at 10 a.m. Eastern. WTI November 18, 2018 options expire today. Remember, you have to roll your crude position to the next month before Monday. Monday, your clearing firm is likely to close your positions, force close your positions out for you in order to avoid delivery on what is a physical product. So that's where we stand so far. As far as what we were looking for yesterday in our review segment, yesterday the main trade idea was for the market to test this prior low, 22.25, push down into there, and then get a pop and push all the way up potentially to 27.62. I expected some challenge here at 27.50. The secondary scenario is for the market to push up to 27.50, impulse down, get out of the prior day's range, and start making its way down to through 2700 down into the 2796 area. Here's what actually happened. We'll look at it on the trigger chart. Again, I'm on a laptop, it's a little slow refreshing. Here's what we have. Come on, you can do it, baby. You can do it. Here's what we have. We have a push up immediately into 27.44, squeeze through the opening swing low, push back, and then we get this tag below the prior day's low at 27.2250. We get to 1950, 27.22 and a quarter actually, and then we rotate all the way up to have neutral. So what we've done here is we broke the IB low, and we've pushed all the way up and made what is called neutral day type. A neutral day type signifies neutral occurs in the S&P historically. Approximately 27% of all days are likely to break the IB high and the IB low, which gives you another statistic, which is around 73% of all days are likely to only break one side So if the IB high is broken, then 72, 73% historically, again, past performance is not necessarily indicative of future results. Statistics being what they are, they're constantly changing incrementally. But the setup here is that if we break the IB low 72% of the time or 73% of the time, we are likely to hold this high. So what you have is a bunch of stops that kind of linger here for all those market profile types. Betting on that 73% probability, we generally break just one side or the other, and we break either side, one or the other, 98% of the time, 90%, 98% of all days, 97, 98%. It varies just slightly. So those are kind of classic market profile type setups. And what we had yesterday is we broke the low, then we broke the high. We just splashed right through a little a quick spurt in volume there. You could see stops getting lifted, and we push right into the what I talked about, that 50 area, the low volume node from the prior day, which was the key spot for scenario 2 and the initial target for scenario 1. We push into it, we pull back, we push into 55.75, and then we just fall right through and go back to the neutral bottom again, which is very rare. It's rare that we break neutral and return to the first break that we had that morning. So just odd behavior overall. Um, and what we ended up with is a market that really balanced out at the top, balanced out in the middle, balanced out at the bottom. And what it's saying, and given the profile shape, see how boxy this profile is? The profile shape is basically saying that both sides are active in this area. There's no consensus on price. It's testing prices throughout the range. So the value area here, statistically valid, although we don't see a Gaussian curve. We don't see a rounded curve here that we trade off of. So today is likely to be a reversal day. We're likely to end the one-time framing, and I'm looking for that 27.55.75 to be broken today, given the type of action that we had yesterday. A couple of interesting pieces that fall together here in terms of symmetry. The overnight point of control 27.28 was 27.27. If 27.27 doesn't ring a bell for you, a loud bell, then it should. The point of control for the entire year, volume-wise, is 27.27.50. The point of control from October 31st till now is 27.27.50. Yesterday's close is 27.27.50. And like I said, the overnight point of control was 27.27 and now is 27.28. So we have a lot of acceptance in this area, and we're likely to chop around and go into balance here, since this price is accepted on multiple time frames, including the day time frame yesterday with the close. And so I'm looking for that. That's one of the key drivers today to test the other side for that scenario. Okay. Hopefully you can all hear me well. Looks like somebody's not hearing me. I'm not sure. And so that's what we had yesterday. Coming into today, here's what we did overnight. Opened up, tested higher immediately, okay, and then rotated back through, consolidate, test the low, 27.11, and then we are rallying pretty strong here from the European Open, which was right around here. Okay, so the market on the European Open, on the Asian markets, we kind of consolidated quite a bit. Asian markets right in here, consolidated quite a bit. But on the European Open, we tested the prior low, and then we have been rallying since, and we have a double top at the high now of 27.44, 27.44.50. Now 27.44, more symmetry there. That was the IB high yesterday, and it's carried into the overnight session. The volume in the overnight session, 318,000 versus 119,000, which is the mode currently for overnight volume over the historically, is about 3 times, a little under 3 times as much. So there's a fair amount of activity, expecting that activity to carry over into the day session. So let's look at what we've got here. Again, the gray bands are my stock zones. These are the areas of opportunity, pre-planned areas of opportunity, or decision areas, or areas that I plan to do business. These are all, that's what those gray bands are for. They're updated dynamically, and they're updated every morning pre-market. So we're opening in the 2744 stock zone. We're opening higher. We're opening in range out of value. Again, value somewhat questionable from yesterday. Expecting an open auction, expecting responsive selling into the overnight point of control, looking for an impulse up, consolidate again at 2744 or so, and then begin to drift up and take out this high from yesterday before we settle out. This may, of course, continue higher. The target higher is 2780, 2782 if it continues to find buying pressure and we start a short squeeze. The profile at the end of the day is expected to look somewhat P-shaped with an HVN at the bottom, or somewhat P-shaped. The secondary scenario is that we continue to drift up, take out the double top in the overnight session, push into the next stock zone, poke through, have our impulse down, consolidate in the middle, drift down into the closing price, and then test the point of control from yesterday and hold steady in the middle. Scenario 3, I won't draw. Scenario 3 is an open test down, drive higher. If we see an open test drive, if we see an open test down, drive higher, what do we not do? Anybody? I know there's a delay here, and I can't wait for your answer, unfortunately. What we don't do against the drive is fade it. So if the drive is higher, if we test down and drive higher, we are not sellers. Okay? Unless you're willing to, if you're feeling charitable today and you want to donate a portion of your account, 10, 20, 30, 50, 60%, fading a drive, then that's cool. Then go ahead and sell a drive up. But if you're trading like a trader, in other words, you're looking to grow your business and increase your size over time as your edge shows itself, so that you can make a career out of this, which is the whole reason I'm talking to you, then you don't fade a drive. Don't fade a drive. You don't go against the drive. So open, test down, drive up. And then the fourth scenario is an open, test up, drive down. If we drive down, we're looking for 2705, 2698.50, and 2691 below, the composite low volume node down here. Okay, that's all I have for you. Good luck today. And again, no crude oil inventories today. They'll come out tomorrow. I'll catch you tomorrow morning. Take care.